Well, our next guest here in studio says that smaller companies in particular sectors here in the United States are vulnerable to the debt troubles bubbling out of Europe. Which sectors are most sensitive? Joining us with insight is Satya Pradhuman. He's CEO and founder of Cirrus Research. He is with us. You know him as having founded the small cap research department, working there at Merrill Lynch for many years before you founded your own firm. Thank you for coming in, Satya.
Thank you. Good morning.
Now, there is a true debate out there about whether, the concern about Europe's sovereign debt issues is going to bubble up into more of a global banking crisis at this point.
Correct.
That aside, what does that mean for smaller cap companies here in the United States?
I think you've got really two issues at play. One is whether you've got a legitimate U.S. economic recovery underway. As a result of that, the smaller companies in the U.S. probably do a lot better. We've been seeing that. It's played out pretty nicely. Part two of this is that how severe do the concerns in Europe spill over into the U.S.? The reality is that we're not completely insulated. One of the research reports we put out shows that if you were to create a basket of smaller and mid-cap companies, a lot of them, the ones that are mostly related from our work, seems to come from the energy-related, materials-related plays. What we look at those, it looks as if they've weakened pretty much in parallel to how the euro has been correcting. So the reality is that the U.S. equity market, smaller companies, are not insulated from concerns overseas.
It's interesting that you focus on energy as well, because it is viewed as so leveraged to the global growth story. So it would seem a direct concern there. Are you finding any opportunities?
Absolutely. I mean, I think you've got, if this current sort of banking liquidity crisis settles, you've got a pretty solid recovery that seems to be playing out in some of the smaller areas, such as within the smaller regional banks.
Okay.
If this credit cycle settles, no other area can we see those areas recover than the regional banks, as an example. So
even though we are seeing the interbank lending rates, LIBOR, on the rise, continuing to rise, you're saying that there are places to put money to work within banking.
Absolutely. If that cycle settles a bit, you'll end up seeing the U.S. economic cycle really stabilize. But we're still sort of at a crossroads right now because of really the drama in the last 10, 15 days. But in some ways, we are seeing the recovery play out in the smaller companies, certainly in the last 6-9 months.
And today's GDP numbers that lend more strength to that thesis for you?
Absolutely.
So what could derail that more? I mean, when we look at the question of Europe, further intervention there, what would change your story? Yeah,
I think what we're quietly and carefully watching are really the interbank lending relationships. What we've seen is 10 or 15 days of that back up to about 50 basis points or so. That's not crazy, but it's certainly something to be watching carefully. If you look back in the last 20, 30 years, we've seen banking liquidity measures back up about 11 times.
Okay.
2 of those times they've lasted for 20, 30 months, and those are periods where you have real destabilization.
Satya, thanks for coming in. I want to break away to some headlines.